Yeah, I love it as well. So here's the thing. I mean, the path you're describing, for someone to get into active investing because you're trying to generate that income to cover your living expenses, and then you have excess that you invest. Now we have passive investors who come to us who are high income earners, and they also have higher expenses, but they actually have money to invest. So they kind of skip the active step because they don't feel they don't really need to do it. And that's right. I mean, if you have an excess of 100, 200, $300,000 to invest every single year because you're making $500,000, they have that same problem you had. And so a lot of people get into that situation. They're getting into that I quadrant, right? By becoming an active entrepreneur first. And we see that a lot. Now, I'd be curious because you've done this for yourself and you've studied this through a mentor and through experience. You have to walk us through some of your 10 commandments. You have these 10 commandments of lifestyle investing. So I'd love to hear these, Justin. Share these 10 commandments of lifestyle investing.
Sure. Yeah. So I can, start out with the first one, which is pretty simple. It's lifestyle first. And so I don't want to invest in a way that's going to take my time. At a certain point in life, you are willing to spend time to have a better return. And some people, maybe that's the way that they start, is they do some real estate that they own themselves. They're going to spend more time doing it. They'll likely get a better return. But at a certain point, they'll probably weigh, is that time really worth the extra return? Or would I rather, invest with someone like you, Michael, and have you do everything from an institutional standpoint, from a, you manage all the properties and you do everything, and I just invest money into, your syndication. Well, in that case, you spend less time doing it and you get a lesser return, but it likely can still be just as good of a return as you need, especially if you find the right deals. And so to me, it's about figuring out that lifestyle component. I want to invest in a way that strengthens my relationships, that strengthens my my time for being able to create wealth. And when I think of wealth, I think of health, I think of relationships, I think of impact, purpose. Of course, finances are part of it, but it's not the only part of it. And so lifestyle first really supports all those other things. And so that's why I kind of start there with commandment one.
So lifestyle first meaning does that require kind of a clarity about what you want? Is that kind of the step where you're trying to create what you want and what lifestyle you want?
Yeah. I mean, there's definitely clarity that, that happens. So, in my book, in this section, I have something called a freedom vision. And my goal is to coach people into creating this vision, this compelling vision of the future of what your life could look like. And by using cues and prompts and things like that help people see, hey, what do I want? Do I want freedom of time? And how so? How specifically? Do I want freedom of impact and of purpose? Do I want freedom of, relationships? Do I want freedom of being able to spend as freely as I want to be able to spend and do whatever trips I want to do? So I feel like you got to get clear on what it is you want out of life to figure out what you're going to do to support those goals.
Yeah.
So you start with lifestyle first. All right. Figure out what you want. Then what do you do?
And then the next commandment, which is number 2, is to reduce the risk. So for me, I think it's so important to not lose money. When you lose money, you got to work twice as hard, even more than twice as hard. If you lose half your money, you got to work twice as hard to make that back. And you forever lost the opportunity cost of what that money could make you. So that one to me is imperative. So whatever I need to do, I want deals. I'm not looking for the biggest return. I'm looking for deals that are the most protected with a good return.
And often, don't think about it this way. If you lose dollars after, like, the dollars you lost, you pay tax on those dollars. So it's twice as hard to get that money back. Right. And so you have to work twice as hard just to get anything going. So you really, really don't want to lose that. And then, and that's even for us on our, the active investments we do. I'm always trying to protect downside risk first, and then the upside, hopefully takes care of itself. And so I think that's such a key point, Justin. Cool. Awesome. What comes after that?
Yeah. So the third one is to find invisible deals. And so that's what I call them, because I want opportunities that other people are not fighting after. So if you limit the competition, you generally can get some good prices. Find something off market. You can, pay attention to trends that are happening. in the marketplace, what is hot, what's taking place, what are, like e-commerce is booming, and things that support e-commerce is huge. How do you buy assets that people aren't selling, but you make a good enough offer that they want to sell? So that way, it's just a private transaction done very quietly. I've done many like that. And you look at all these other kind of like frontier and emerging markets, and I don't want to call like cannabis an emerging market, but it kind of is in the US on the legal side of things. And so, I see a lot of opportunity there. You've got cryptocurrency, you've got so many things that are cutting edge. And so I think that people should consider what else, like technology companies. There's so many, your SaaS companies, there's so much that can happen where you're investing in a place where the returns are amplified and multiplied.
Yeah, that's amazing. So yeah, we always jam up the stock market and how risky it is. You found these, these different types of assets, and they have this. I think this is a really interesting part of the book that you said, is that you look for these deals that have income multipliers, right? What does that mean, and what are you looking for with that?
Yeah, so if I can kind of enhance the deal, that's really what I'm looking for. So there are a lot of different ways, so like if you think of my 10 commandments, specifically we'd be jumping here to like 6 or 7, commandment 6 or 7. So finding an income amplifier there are a lot of ways you can do it. One way is by investing and having some sort of cash bonus, or maybe you negotiate an equity kicker, or maybe you have the opportunity to get your money out quickly, but still have the same amount of equity. Maybe it's negotiating warrants as well, some sort of warrant coverage. I mean, there are a lot of ways that you can negotiate more for your investment. And so the way that the deal shows up is generally not the way that it needs to end. Whatever terms you're getting are good by whoever is probably presenting them. But if they work for you, great. But if they don't work for you, don't be afraid to say, hey, could you do this? Or, hey, I'd be more interested if this were the case. In a lot of deals, you're doing the negotiating. So you can ask for whatever it is that you want. Most of the deals that I do are like a clean slate, and it's just starting from scratch, and it's figuring out, what those deals look like. With you guys and some of the things you do, I would imagine your deal points are a little bit more set. Because you've run the numbers and you know where you need to be to make it work. But if someone is not investing in a syndication and maybe they're just on a one-off deal with the seller, the sky's the limit. You could put 0 down. You could put 5% down. You could, you could seller finance for 20 years. I mean, there's all kinds of stuff that can happen.